Assalamualaikum and good evening to our lecturer, Mr. Dayu. Today, my group and I will be presenting about our topic, which is clubs. So, before we start, I will have my friend to introduce our group members.
Hello, my name is Ahmad Safi Mustaqim bin Hamdan. Before we proceed with our presentation, let me introduce the members of our group. Muhammad Bakir Hakim bin Abdul Rais, Raja Iman Mikael bin Raja Azrin, Muhammad Haziq bin Omar, and Iman Fahim bin Muhammad Khairi. Now, let's move on to the next presenter, Bakir. He is going to present the introduction of our topic.
Alright, so first and foremost, let's jump right into our topic. And as I've mentioned earlier, our group has chosen clubs for our group project. First things off, you must be wondering, what are clubs and societies? Let me answer that question. So clubs and societies are formed for social recreational, sports, arts, science, literature or other leisure pursuits for the interests and benefits of their members. The term club means an association formed for other than business purposes, which means that the goal isn't to generate financial advantage, but rather when a person who agrees to maintain an establishment for the common personal benefit and not for profit. Additionally, a club is registered under Societies Act 1966. Next, while we're still in the introduction, let me explain about the tax treatment of clubs. For this organization, it is normally set up to service its members and therefore have to rely on principle of mutuality. For your information, members means persons who are entitled to vote at a general meeting of the club where effective control is exercised over its affairs. Next, we're going to be discussing about principle of mutuality, which states that a man cannot make a profit by trading with himself. So, for example, subscription fees paid by the members are not seen as profits, since members are not seen as customers. Therefore, any contribution by its members are exempt from tax in the hands of the club, and any surplus of contributions over expenditure does not equal income. Lastly, when dealing with non-members of the club, the principle of mutuality no longer applies, which means exposure to tax on any surplus that may occur. For example, if a club opens up a restaurant to the public, the income from non-members buying would mean trading income, which will be taxable unlike income from members.
Let's move on to the accessibility of receipts under section 53A. With effect from year of assessment 2009, club would have two sources of income, namely A, income from members, and B, income from non-members. Income from members with effect from YA 2009, any income arises from transaction with members shall not be taxable under this act. This would include entrance fees and subscriptions received from the members, provision of services to members for a fee, and sale of goods to members. Likewise, any expenses or capital allowances attributable to such income shall be disregarded. A separate account in respect of income derived from its members and non-members must be maintained. Any loss must be disregarded. While income generated from the provision of trading facilities to members is deemed to have carried on a business, it would be deemed as trading receipts and assessed under Section 4A. Moving on. Non-members are those persons who are not entitled to vote at general meeting of the clubs and societies, at where effective control is exercised over its affairs. Any dealings with non-members with regard to the following are treated as business income. A. Fundraising activities or events open to the public, such as sale of cookies, fruit juice, handicraft, etc. B. Rental received for hiring out the club's hall, facilities, or equipment to the public. C. Amounts paid by non-members to attend dinners or social functions, or talk, presentation, or workshop. D. Proceeds from non-members on charitable event. Furthermore, trading activities such as restaurant, bar, entertainment outlets, gymnasium, massage center, yoga, selling beverages, souvenirs, and proceeds received from vending machines derived from members and non-members within the club premises are profit in nature and subjected to tax. However, cash donation received from members or non-members is capital receipt, which means they are free from income tax. As income from members are exempted under Section 53A subsection 2, the computation of adjusted income from non-members will be as follows. First and foremost, we start with gross income from non-members, denoted there as XX for illustration. Next, subtract revenue expenses incurred. These are calculated using the formula A multiplied by the ratio of B over C, where A represents common revenue expenses, while B is the non-member gross income, and C are the total gross income from member and the non-members. After deducting the expenses, we arrive at the adjusted income, where we further subtract the capital allowances computed as D times the same B over C ratio. The final result is the statutory income, where the taxable amount after all the adjustment. Now, let's tackle the best part. Cash donations to an approved institution or organization are entitled a deduction up to 10% of the aggregate income of the club and society. The amount of donation must be apportioned as follows, where G represents cash donations under Section 44(6), H as aggregate income from transactions with non-members. Lastly, I, aggregate income from transaction with both members and non-members. Furthermore, investment income such as interest, rents, all of it will be accessible in the hands of clubs. For instance, in the case of Management Corporation Strata Title Number XYZ and CIT 1993, it was held that rental interest received from non-members is accessible to tax, as the principle of mutuality does not apply. The sums paid by non-members cannot be equated with contributions from members, while dividends is tax exempt under the single-tier dividend system.
So, I will be explaining the format for computing the chargeable income, especially the difference between the members and the non-members. So, we will start with the members first. The process begins with identifying the gross income. From this amount, we deduct any allowable expenses to get the adjusted income. Then, we further deduct the capital allowance, which refer to claim for the wear and tear of business asset. After this deduction, we get the statutory income. However, for the members, this statutory income is not subjected to tax. This is because any expenses, capital allowance, business loss, and donation related to members are disregarded for tax purpose. So, in short, the income from members is usually not taxed. Now, when it comes to non-members, the calculation is more detailed. We again start with the gross income, but here we deduct the direct revenue expenses as well as the common revenue expenses. These common expenses are apportioned based on the gross income basis. After that, we take into account any common planned expenditure and then deduct the capital allowance, which also need to be apportioned using the gross income basis. This gives us the statutory income from non-member sources. Next, we add any investment income to the statutory income to get what we call is aggregate income. From this aggregate income, we then deduct the approved donation, which must be apportioned based on the total aggregate income. The final amount of this deduction is what we call the chargeable income, and this is the amount that will be taxed. For the club and society, all computation are calculated based on scale rate method. So the image on this slide is basically showing the rate for the budgeted 2024 version of Malaysian taxation rate.
Okay, so next up we will look into the example question. So these are the information given by the question. So the first one, which is the income from members, entrance fee and subscription fees, and a total of 180. And then the non-members, we have fundraising activities and seminar fees, which a total of 120. And then the question given us the gross income from members and non-members, which is 300,000. And then there is a rental from shop house, 200,000. And then the question also give information about the expenditure. Here we have to give more focus because we have to decide which is the direct expenditure and which one is common expenditure. because it will affect our calculation later on. So for the first one, hotel hall rental for seminar, it is mentioned that it is for hotel hall, so this is a direct expenditure. And then we have salaries and wages, which is not mentioned for which one, so this will be regarded as the common expenditure. And then we have repair and maintenance on the shop house, which is direct expenditure. And then we have administration charge and postage and printing, which is the common expenditure. And then the question also give us information about the donation, which is to an approved institution. And then the question also give us a capital allowance for YA22 of 15,000. And then the question require us to compute the income tax payable for YA 2022. Okay, so the answer will look like this. So first of all, there will be this column, but I add one column for the members, which will is asked for calculation later. Okay, so first of all, section 4A, business, fundraising activities and seminar fees, which is 80,000 and 40,000. Then we will get the gross income for non-members of 120,000, while for the members are 180,000. And then we will left with wholly and exclusively expenses. So the first one, which is hotel hall rental, where we discussed in the previous slide before, there is direct expenses for the hall, which is 28,000. And then for the common expenses, we will have to look into note one, how do we can get the 180,000. So 180,000 is actually consists of the salaries and wages, administrative charge, and the salary, the postage and stationery. So we will get 180, while 120 is the gross income for non-members, and 300,000 is the gross income for non-members plus with the members. So this is actually the formula of A times B over C, which is presented before by Iman. There we will get the 100,000 for non-members and 105,000 for members. So the adjusted income for non-members is 20,000, while the members is 75,000. And then we will look into the capital allowance. So the formula for capital allowance is actually quite the same with common expense. It is D times B over C. So we don't have to change the B over C. We just change the amount of A become D. So actually, the amount is given by the question before in the previous slide. So we just put it into formula and we will get for the non-members is 6,000, while for the members is 9,000. And then we will get the statutory incomes for non-members 14,000, while the members is 63,000. And then we proceed with section for the rental, 200,000. And then less allowable expenses, which is the direct expenses that we looked into the previous slide before. And then we will get 176 for the non-members. There is none for there is no amount for members because the rental is for non-members only. So the aggregate income is 190,000 for non-members and 63,000 for members. And then we will look into the approved donation. So 10,000 is the amount that the question given. 180,000 is actually the aggregate income of non-members, and then 250 is aggregate income of non-members plus the aggregate income of members. And then we will get it is 7510. And then after deduct, we will get a chargeable income of 182 and 490. And then we will calculate the income tax payable according to the scale rate. So the first 100,000 will be 9,400, while the next 82,490 will be at 25%, which is 20,622.50. So the total tax payable will be 30,022 ringgit 50 cent.
Now, I'm going to talk about the income tax exemption. The income tax exemption falls under paragraph 26, Schedule 6 of Income Tax Act 1967. It is divided into two organizations, which is National Amateur Sports Organization and State Amateur Sports Organization. The income of A, any National Amateur Sports Organization certified by the President and Secretary of the Olympic Council of Malaysia to be affiliated to that council during the basis year for any year of assessment, and B, any state amateur sports organization certified by the president or corresponding officer and secretary of an organization to which paragraph A applies to be affiliated to that organization during the basis year for any year of assessment, being in each case income for that year of assessment, provided that the exemption under this paragraph shall not apply to income consisting of dividend. Based on my explanation in the previous slide, this is an extract from the Income Tax Act 1967 Act 53, taken from the KPMG website, which states the exemption of income tax regarding the national and state amateur sports organizations. That's all for me. Thank you.